And Nick, did you want to talk about children on payroll? A lot of the fishermen will have their kids clean the boat, pack the boat.
Yeah, so, okay, this is a great one. If you have children under the age of 18, you can pay them through your business. Now, it's a little trickier if you're an S Corp. So if you're just an LLC or a sole proprietor, this works best. But basically, if they're under the age of 18, you can pay them up to the standard deduction that everybody gets when they file their tax return, which for 2024 is $14,600. So if you have a child, 14, 15 years old, you're trying to kind of teach them some responsibility. What we say is, hey, don't make money, pay tax on it, and then give the kids money. Instead, let them work for your business in some way, earn this money, gain that perspective. But then you're also getting a write-off because you can pay them up to that $14,600 standard deduction. You don't have to file a W-2 for them. You don't have to withhold a dime of any taxes, no Social Security, no Medicare, no federal, because they're under the standard deduction and they're under the age of 18. And then you get to write that off against your business. So that's a great deduction that people don't often know about. And we even have clients with young children, 3, 4, 5 years old. And you'd be surprised, you can find things that you can pay them for, like modeling, pictures for the website, helping you clean the boat, like Mitzi said, organization maybe of if you have like a storage space. There's just a lot, that unlocks a lot of opportunities, for great deductions, and you're getting that value teaching your kids work ethic at a young age. So it's really great all the way around.
And there are requirements. So there are some requirements you would have to actually pay them. It would have to go into their checking account, but you could have control over that checking account.
Okay.
Yeah. And it needs to be reasonable. It needs to be reasonable. You wouldn't want to pay them $300 an hour to clean the boat. It needs to be actual what you would pay someone else. So,
okay. Excellent.
Great tip. I got a 15-year-old, so great tip. Thank you,
nice.
guys.
There you go. Yeah.
Put them to work.
For you people that have a 6-month-old, I don't know if that'll work.
No.
Modeling. Yeah, that's about all you can do at that age.
Yeah.
Since you mentioned modeling, we'll get another question from the audience. We're based in Virginia, but we also have a Tennessee and North Carolina sales tax license.
We can file, we can file those state sales. Maybe they're selling products in other states or selling online, and they have Nexus is what they call it when you reach certain thresholds to where you need to file those sales tax returns. So that is something we see, and we can definitely help file those returns and report that info if that's something you're interested in.
Now, if you pay tax on a product, like I go out and buy a fishing rod at Walmart or wherever, can you write that tax off as part of the expense?
Yes.
Okay.
The full purchase price can be written off.
Okay. Now, so a lot of fishermen now are branding themselves. Okay. Making themselves a business. When they start selling merchandise, whether it be hats and shirts or coolers or whatever, do they need to collect sales tax on that stuff?
Possibly.
Okay.
Yeah, possibly. Mitzi, do you want to dive into that?
Yes. So it depends. Every state is different. Every state has their own sales tax requirements, but most states, I think maybe all states, do require you to collect at least some sales tax, but they all have thresholds. So if if you only earn $100 or even $500 in a state, you probably don't have a sales tax requirement. What a lot of people don't realize is if you're going to sell or do business of any kind in a state, you need to register with that state, and that will trigger the sales tax responsibility. And so you'll register your business in that state, and then you will register for sales tax, and we can help with all of that.
Yeah, we see too a lot of times people say, "Oh, I created an LLC in Delaware because because they have the best laws." But really, that doesn't really do you any good. It depends, where are you actually doing business? Are you doing business in Texas, in Oklahoma? Where are you at? Because ultimately, if you're doing business in a different state, then you need to register there technically.
I know we got a quick question from Kevin. He says physical nexus versus economic nexus.
Yeah, Nexus, that's kind of what we've been speaking about with the sales tax, for example. For example, like a physical nexus is if you're physically in the state. I have a store, I'm selling rods and reels here in Texas, so I have a physical presence here at this store. So obviously you're going to collect sales tax based on that location. Here in Texas, it'd be 8.25% in most cities. Now, what we see though is maybe you're an online retailer and you're sending products all over the US. Well, that is when you kind of need to dig into the economic nexus and look more into, am I meeting those thresholds?
Okay.
Oh, and I see that he says that was not a question. Sorry.
That's my bad. My bad.
No, that's okay. That's okay.
Yep.
I was about to ask that. Like, if I traveled to Virginia and visit Jeremy May and show him how to fish on the James River, and I sell him my stuff, do I claim that on taxes? Or do I claim that? Do I have to do sales tax on those sales?
If they're made in the state, they are subject to that state's sales tax. But again, it depends on the threshold.
Okay. All right. And Jeremy, I'm only picking on you about the James River.
Now, if like say me or John, we start making our own lures, we make some jig heads, and we're just selling maybe 10 packs a month, and it falls below the threshold, we don't have to worry about sales tax or anything like that.
Not if it's below the threshold. And
Okay.
every state has a different threshold.
Yeah, so
But
that's
technically, you are required to register in that state anyway. Most people
Okay.
don't.
Okay.
As a DBA or?
You could be a DBA.
Okay.
No.
So if I did a DBA for JCX Fishing, okay, I would be able to claim all my fishing expenses towards that business?
You don't even have to have a DBA to claim those expenses. So
Yeah.
Okay.
you could just be John,
Yeah.
company. And I
Right.
mean, you don't need a DBA, you don't need an LLC. Those are all for different purposes.
Okay.
So if you want name recognition, or you want to build business credit, then that's where those things, or you need liability protection, then that's when you start creating the LLC or creating an S Corp.
Mm-hmm.
Yeah, when I created my marketing company years ago, I went to an accountant and they're like, I don't trust LLCs because they can't tell me what is limited liability means. So he signed me up for an S Corp.
So an S Corp is just a tax status. As far as liability protection, it really doesn't affect that.
Here's a question I know people are going to like answered. Are there any red flags in the fishing industry that might trigger an IRS audit?
So most of the time when we are in an IRS audit, unless most of the time it's just a line item audit, and they want to see receipts for interest, meals, automobile expenses if they're really high. Very rarely do they go line by line and audit every single line on the tax return.
Okay.
What I will say is a red flag for an audit is if you report less than what the 1099s say. So if I get 10 1099s in the mail, and if I add all those up and it's 200,000 is my gross, but then on my Schedule C, I put 150,000 was my gross, that will definitely raise a red flag. And so that's a lot of times why we see people get those line item audits.
And don't think that just because you didn't get a 1099, that whoever paid you the money didn't report the 1099.
That's
So
true.
they may have filed with IRS, but didn't have your address and never sent you a 1099.
Yeah, I always appreciate when I get a 1099 because that means I made some money.
Yeah. But the fishing industry as a whole is not a red flag.
Okay.
Yeah. The supplies, writing off rods and reels, your boat, those things are not going to be a red flag. So what we always say is, as long as you're being diligent, keeping up with receipts, and being honest, and you're in it for a profit as your purpose, you really have nothing to fear. You just want to be careful and make sure that you're not under reporting your gross number, or anything like that. But
Okay.
Got you.
mm-hmm.
What's the best way to report the income from tournament winnings, sponsorships, guide services? What's the best way to do that so it doesn't trigger any flags?
Well, the IRS is not going to know that it was from tournament winnings, guide services. They're just going to see a number, gross revenue.
Okay.
So
Yeah,
all of that income is going to go on that one line,
Mm-hmm.
Okay.
except for royalties.
Yeah. On the tax return itself, it's one line. For QuickBooks, though, if you do set up a QuickBooks, it is nice to be able to categorize it by, income type, just for your own records, to be able to see, wow, I really did good with my tournament winnings, or maybe my sponsorship income. You can kind of see where most of it's coming in from. But yeah, for the IRS, they just want that one number.
Yeah. Okay. Now that you mentioned QuickBooks, can you run your personal, and I know you should separate your personal income from your business income. Say like some tournament fishermen, they don't have a separate bank account. Can they do that in QuickBooks? Say, okay, this purchase at Bass Pro Shops was business off the same bank account?
You can. It makes it very difficult if you get audited, because instead of showing them your business bank account, you're opening up the whole can of worms. So we always recommend get your personal account, get your business account. But if you only have one account, yes, in QuickBooks, you can code those by class. So you could have a personal class and a business class.
Yeah.
And then you could pull up only business or only personal.
Right. And if you go LLC route and you end up creating an LLC, typically that next step is opening an LLC bank account anyway. And so that's when we really want to harp on keeping personal out of that account.
Yeah. I got a quick question. I do first year, there's a lot of fishing shows. So I have some sponsors, want me to, go and help them out. Like say it's in Knoxville, Tennessee. Now, do you write off your mileage and the hotels, or how do you approach that? If it's a fishing show, your sponsor wants you to be there at.
Yes. So that's part of your business. That's a business expense. So if you were going to go to Knoxville, I think you said.
Yep.
And it was partially business, partially pleasure, then you could still write off the miles to get there, the miles to get back, your hotels for the nights you were doing business. But yes, definitely. What we see more than people over reporting expenses is people under reporting expenses. People are so terrified that they're going to get audited. They just cheat themselves out of so many great deductions. And you don't need to be. You don't need to be.
Yeah.
Like I can almost look at a tax return and tell you if you're going to be audited. Not 100%, but right, Nick, like, you're a W-2 employee and you have, 50,000 miles of 50,000 miles of travel expense. Well, no, it's not going to pass.
Well, because it's like, if that's a side gig, then it's kind of obvious that, okay, well, I probably don't have that much travel expense. Yep. But maybe if that's your only thing that you're doing, well, then of course you're going to have a lot of travel. So it's things like that that I think Mitzi's referring to, where if you have like 50,000 worth of interest as an expense as one line item, so you're at negative 30,000. That might be like, that's strange. All his other deductions are 2,000 here, or 3,000 there, and then we've got a 50,000 interest. That doesn't seem right.
With no assets.
With no, yes, yeah. So obviously things that are just look like a typo or something can raise a red flag like that. But if you're just being diligent and honest, and you're adding these actual expenses you had, there shouldn't be a worry, about raising a red flag or something like that.
Yeah. And so if I didn't answer your question, you're in the fishing business and you're a podcaster and you have fishing income and one of your sponsors wants you to go to a tournament. Yes, write that off.
Okay.
Excellent.
Good point.
Um,
You got a quick thing from Al. It's like,
Yep. Al with American Angler Outdoors says, I have a network and a lure building business. Should I keep both businesses separate for accounting?
If they are two separate companies that need to be reported on two separate tax returns, yes. If you're putting them on the same tax return, maybe you have them in the same QuickBooks, just tag them separately, separate classes. But yes, each business needs to be listed separately. So if you're a self-employed and you have a network business and a lure building business, then you will have two Schedule Cs. Now they may roll up under the same S Corp at some point in the future.
I was going to ask you, Tim Stakis, what's the approximate cost to create an LLC and the version of QuickBooks you recommend? I know there are several levels to choose from.
Yes. So usually, I believe it varies with states, but like in Texas, it's $300 to form an LLC with the state of Texas. If you do it yourself, that's just the filing fee with the state. You could obviously pay us or an attorney or someone else to create it, and then that fee obviously would be higher. But that's kind of the ballpark. That's about how much you would pay for the state. Typically, to pay someone to do it for you, I would say it's probably going to generally be at least $1,200 to $1,500 for that service. And as far as QuickBooks goes, honestly, if you're just getting started, I believe it's called QuickBooks Self-Employed now.
Yes.
Oh,
Yes.
Don't do that with Nick.
No, why not?
No. Well, it's a completely separate login. We don't like QuickBooks Self-Employed.
So maybe I'm saying the wrong one. Let me pull up their website.
I think it's essential. So basically for QuickBooks, you want to get the least expensive version, start there. And then if you say, well, wait, this doesn't have classes and I need classes, I'm running two different businesses in the same QuickBooks, or maybe I have a personal class and a business class, then you're going to increase your subscription. So you can always go up, you can always go down, but you may as well start at the least expensive version. And then as you see features, if you're going to run payroll, that's another higher version.
And by the way, they've changed the name of this so many times over the past few years, but it's now called the QuickBooks Simple Start.
Yes.
That's what I meant to say. QuickBooks Simple Start. It's $35 a month, but your first 3 months are half price. So yeah, it's really not that expensive. And like Mitzi said, you can always upgrade, but that Simple Start, that lowest level is great.
And we do a 5% discount for our clients. We give them a 5% discount off their subscription.
Cool. And Tim Stakis says, thank you. I'm just going to throw in here because we haven't really, Al says we're an LLC taxed as an S Corp.
So you're an LLC taxed as an S Corp. So each of those businesses could be a DBA that roll up into your S Corp. And that's the way we would set it up.
Oh, okay.
That's a good structure.
So,
or each one could be an LLC that roll up into one S Corp.
And so he wants to track those books separately, obviously.
Yes.
So yes, it'd be good. And you can do that in QuickBooks with the same QuickBooks. You can do it by class, but usually it's cleaner to just set up a second QuickBooks, honestly. But I guess, it's a little bit more economical to just do the class feature probably. And we see people do that if it's easier to keep everything in one place.
And also he's saying he's an LLC taxed as an S Corp. Does he need to keep each company separate? You technically are required when you do your S Corp return to report each individual business on a different schedule, but it will be on the same 1120S.
American Angler Outdoors says, thank you for all the information. Great show, guys. Thank you. Appreciate you. Al, let's give you, I have a question for you. It's not really tax related, but what's your favorite homemade cookies?
Nice. I like that.
Mine are macadamia nuts.
I'm just chocolate chip cookie has always been my favorite.
Okay. Well, like we said before, my wife and I used to have a podcast, and that was one question she asked every guest. was what's your favorite homemade cookie, and so.
Nice.
Now,
That's
now, can I like say my wife sponsors me with food, right? Because she's a baker.
right.
Is there a way that she can write that off, or I can write that off?
Well, technically, anything that's given to you, whether it be money or something in place of money. So, normally if you'd be sponsored with $1,000, so instead someone sponsors you with 1,000 cookies, you would need to report the value of those cookies as income. And then maybe the person gifting them would write off the cost of baking the cookies, the cost of all those, flour and eggs and things like that.
Thank you two very, very much for coming on. Appreciate it.
You're welcome.
Hope our guests got a lot of good information, not what you read on Facebook all the time.
Hope you win some tournaments.
We do. I do too. All right. Good night, folks.
If you found today's video helpful, please give us a thumbs up, consider subscribing and leaving a comment below. And as always, thanks so much for tuning in.